Good evening, all. I request everyone to place their right hand on their heart and request office to play ICA motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Good evening, all. Most respected chairman of the WRC, C.S. Saurabh Ajmera ji, our coordinator, Mrs. Pooja Madam, who is pioneer for taking all of us on this journey of internal audit. And without her support, I don't think that we can dwell into this journey of learning internal audit. Ably supported her with our immediate past secretary of WRC, CA Jinal Savla Madam, who always try to support endeavors of WRC, and our learned speaker, CA Ashwin Bhai. With this, now I request Pooja Madam to give her welcome address to all of us. Over to you, ma'am.
Thank you, Vishanji. Thank you so much. A very good evening and a very warm welcome to each and everyone present here today. I think this is a platform for us to see how the two pioneer institutes come in together for the profession, and the brainchild comes from Jinal long back, and this being the third such series of webinars that we are hosting, covering various aspects of compliances. Today, as we reflect to what we are going to learn, GST is something that has been part of our lives since 2017. We all remember implementation and how things, unfolded into a new avenue of compliance. And over a period of time, we have all seen that there has been a lot of amendments which would have come in the act, in the compliance requirements, and so on and so forth. एज इंटरनल ऑडिटर्स हम नॉर्मली वो कंप्लायंस से थोड़ा दूर रहते हैं, राइट? बट while we are part of the business and we are expected to be aware of what's happening so that we are able to provide that value addition to our clients, to our organizations where we are supporting them in the cap of being the internal auditors, we need to keep pace with what's happening. And that learning we are going to get today from Ashwin ji. Thank you so much, Ashwin bhai, for taking out time. And we are looking forward to a great learning session today. And I'm sure this is going to enrich us a lot because this is an area where we all need to keep pace of. So thank you so much, everyone, for joining in today. Looking forward to.
Thank you very much, Pooja Madam. And as aptly selected this topic of GST, because in each and every organization, if you see 90% of the business transactions are covered under the GST. And if you are able to take that, those transactions which are available on GM as well, then we, being a chartered account, can rely upon those reports as well. Say 2B, if we are relying on GST or 2B, we can say that the purchases are covered. If we are relying on GSTR 1, along with e-invoices and e-way bill, we can say that sales is covered. So that's how it gives assurance to us also while giving any opinion on any businesses. Even we can give our services, value added services, how to forecast and what are the things or trends of the business. Then that is also possible with the data of the GST and the portal itself. So now I request our chairman of the WRC, as we are celebrating this 75th year of the WRC here. I request CS Saurabh Ajmera sir to address all of us. Thank you very much, friends.
So by the time our chairman joined, I would request all of you to enroll for upcoming national conference of internal audit held on 10th and 11th of July. Looking forward for your active participation. With this, may I request our chairman, sir, to address us. Over to you, sir.
Thank you, Jinal Madam. And at the outset, I like to compliment Regional Council Member Jinal Madam for wonderful internal audit series in which more than 12 topic is already covered. And I can say the highest engagement in terms of internal audit we are catering this time at WRC through this series. Friends, as we all know that the expectation of the stakeholder is changing very fast, and internal audit is one of the area where now focus is more on value creation rather than making on compliance or processes. So we have to understand our role in a different way. When we are talking about GST also, lot of automation is happening all around through the softwares, and department is also using the automation. And that is why the role in terms of internal audit is different in GST also. So definitely we have to upgrade accordingly. And today we have with us here Ashwin Chotalia. So wonderful faculty in terms of internal audit. Definitely he will guide for that. And at WRC, I want to highlight some of the initiatives and programs which is already in pipeline. So this is my first address to this internal audit series, and that is why I complimenting each and every stakeholders. And friends, well in advance this time, we have come out with our regional conference structure that we are hosting on 4th and 5th December. So requesting each and every member to participate. We are expecting more than 3,000 members. 3,000 members. Am I audible?
Yes, sir. You're audible.
Yes. So requesting each and every participant to enroll for the regional conference, as we have already announced more than 7 months before, and that we are hosting at a larger landscape, that is Geo Convention Center, and we are expecting more than 3,000 members, where we are inviting all the stalwart of our profession, and the impactful knowledge sharing will be there, and meaningful engagement we want to drive over there. Friends, as highlighted by Jinal Madam also, on 11th and 12th July, we are hosting the National Conference on Internal Audit at BKC, ICI. So requesting each and every members, please enroll for the same also. And this will be a physical program where again, we are going to discuss in depth for the internal audit, and lot of deep dive exercise will be done through our speakers. Furthermore, friends, WRC is trying to have more and more publication to empower all our members. So definitely very soon, under the leadership of Internal Audit Committee Chairperson, Jinal Madam, we will come out with the RCM metrics in terms of publication. So looking forward for your participation in this publication also, and we can have more intuitive knowledge sharing experience through these initiatives. And we are trying to create a heavy impact on our profession through the various knowledge sharing programs and intuitive experience in terms of engagement. Looking forward for your participation, as we are looking forward to have your footprint on digital database also, on website, and we have come out with WRC Connect also, where you can get all the stuff which we are doing for the benefit of the members, for the acceleration of our profession. As being 75th year chairperson, we are targeting 75 new initiative also, which we have already announced on 1st July. And very soon, we will definitely on the ground for all the 75 initiatives and requesting all our members to participate at length. With these, once again, want to hand over. Jinal Savla ma'am, over to you.
Thank you so much, Saurabh sir, for amazing address. And friends, believes in empowerment and inclusivity, and with his all regional council team, he's continuously working towards excellence. And all our programs are are announced well in advance, requesting everyone to take active participation wherever possible. And thank you so much once again, Chairman sir. And now it's time for the introduction of our today's learned faculty, CA Ashwin Chotalia sir, who is seasoned player. And thank you, Pooja, for brilliant initiative. Looking forward for many such collaborations with IIA Bombay chapter. And friends, it gives me immense pleasure to introduce our today's learned faculty, who is seasoned player and having more than 10 years of experience in indirect taxation. He is also a law graduate and partner at Mehta Choksi and Shah. He has extensive expertise across diverse industries, including manufacturing, shipping, construction, IT, entertainment, pharmaceuticals, and automobiles. His core strengths include GST litigation, assessments, refunds, advance rulings, compliance reviews, transaction structuring, and strategic tax advisory, helping businesses navigate complex indirect tax matters with practical solutions. So let us welcome our today's learned speaker and wishing you everyone a very happy learning. So over to you, Ashwin Bhai. Thank you.
Ashwin bhai, you're on mute. Sorry.
Thank you, Chairman Sir, Saurabh Ajmera Sir. Thank you, Vishen Bhai. Thank you, Pooja Ma'am. Thank you, Jinal Ma'am, for this wonderful opportunity to share my little bit of knowledge over the GST in this 1.5 hour or 2 hour session today that we are going to deliver. Or rather, it will be a deliberation on the IMS or GST, how it is going. And from the internal audit point of view, why it is so much important, of course, in this 1.5 hour, we are going to dwell into it. So from the, I'll start with my presentation now. My screen is visible?
Sir, yes, sir.
Okay. Okay. So today's roadmap will be like this, that we will be first going into why this IMS is important, why this we are talking about the GST and the digital era, why everything is online, why it is important to have the IMS, e-invoicing, and how it is interlinked to each other. So GST landscape over that. Then why IMS, how legally it is enforceable, what is the mechanism, how it works, within what timelines we have to comply with it. That is all we are going to cover in section 2. Then IMS compliances. If you are complying with IMS, then what are the errors that you might come up and what are the remedies that we'll also look into. After that, because of the IMS compliances or non-compliances, what are the possibility that you come across the notices, how the department or the system works, that we will go into it. And as an internal auditor, what things that you need to take care of while having an internal audit of any organization, that will go into, and followed by the question and answer. So first we'll dwell into the digital GST audit landscape, why the audit ecosystem is fundamentally shifted and what it is shifted to. So everybody is aware that now most of the corporates, or we can say uh, business entities having turnover above 5 crore are mandatorily required to have the e-invoicing. And e-invoicing is the digital print of the transaction that you have on the particular transaction on live scenario basis. It is mandatory for most taxpayers, and what I understood lastly, that over 12 lakhs registered taxpayer out of 1.25 registered taxpayers are mandatory to have e-invoicing, and e-invoicing is mandatory because, for all the taxpayers who are having a turnover of more than 5 crore on PAN level basis. So if any particular entity having registered place in multiple states, then PAN level transactions need to be included whether the e-invoicing is applicable for that particular entity or not. After that, we comes to e-way bill. The e-way bill is required for all the movement of the goods, whatever the movement that of a particular any entity who is into uh, goods sector or inventory sector, wherever there is a movement of the goods, e-way bill is mandatory. So e-way bill is important for any transaction. As an internal auditor, you need to check if a particular goods is moving, whether the e-way bill compliances are being complied with or not. And of course, if the supplier is required to generate e-way bill, then whether he has generated that particular e-way bill or not, whether e-invoicing compliances are being taken care of or not. Then comes the IMS. So this is the third aspect. First, the e-invoice is already generated, the goods are already moved. Whether a particular supplier who is supplying goods to you, whether they have reported those transactions in GSTR1, if such transactions are reported in GSTR1, whether it is appearing in your IMS dashboard, that is Invoice Management System dashboard, as a recipient of the goods or the services that comes into the picture. And of course, this is the whole session that we are looking going through will be mostly on IMS and how it is impacting our 2B. Then the layer 4 that comes is the audit of this particular transaction that are reported by the supplier, and we are taking the credit of that particular ITC, or we can say that whatever is been reported by the supplier, whether are we taking the ITC of that much only, are we taking the ITC only that much, or we are taking credit more beyond what is been uploaded by the supplier. So now let us come to invoice management system, its its legal validity. Invoice management system. Invoice management system is introduced from 1st October 2024. The advisory related to it was published in September 2024, and it got operationalized from the October 2024 GSTR1 or GSTR2B. We can say that the first GSTR2B which was generated based on IMS was generated from on 14 November 2024. So whatever the transactions were appearing in your IMS system got translated to GSTR2B for the first time on 14th November 2024. And initially the compliance for the IMS was optional, and gradually it was started to have a compulsory, or we can say that it became the backbone of the credit that you are claiming in GSTR 3B. What it does, it allows recipient to accept, reject, or keep pending the invoices uploaded by the supplier in their GSTR 1 or 1A. GSTR 1 is that you file by the timeline, that is by 11th of the particular subsequent month, or IFF that you upload on the next or 13th of the subsequent month. IFF GSTR1 is applicable to those entities who are having monthly return filing frequency, and IFF is applicable to those who are having quarterly return filing frequency. So any invoices that you are uploading through GSTR1 or IFF can again be amended before filing 3B through GSTR 1A. So that is GSTR 1A. So after these invoices are being uploaded on GSTR 1 and on the dashboard, when you accept those invoices, it will translate or generate your GSTR 2B as an ITC that you are eligible for. Now, as a supplier, he would have uploaded many transactions. So you need to, as a recipient, you need to take care of, or you need to scrutinize all those transactions, whether it is eligible, ineligible, whether those transactions are appearing in your books of account, whether those transactions are correctly reported by the supplier in their GSTR1. Is there any mismatch between the invoices that you are physically receiving or digitally receiving and what has been uploaded by them in GSTR1? Are there any differences? So this is something that you need to check or need to take care of while scrutinizing these transactions. So this IMS facility is having its unique feature because of its real-time visibility. Once the supplier has uploaded a particular transactions in GSTR1, then on real-time basis you are able to check those particular invoices in your IMS dashboard on GST portal. You can take the action on real-time basis. Either you can accept it, reject it, or keep it pending for the future correction or future action. One another important aspect in IMS is that if you do not take any action on IMS portal, then whatever is uploaded by the supplier is deemed as you have accepted, and based on that, it will throw or give you the GSTR 2B. Once this GSTR 2B is generated, it will flow or result into the ITC eligible as credit in GSTR 3B. So this deemed acceptance is actively or inactively, passively or actively, I can say that it will result into the acceptance or deemed acceptance or compliance with the IMS portal. So what are the legal basis of this IMS? Many people in GST say that as IMS is not having any legal backup, or whether is it mandatory that IMS should be followed, or whether if IMS is not having any legal backup, can it be challenged in the courts if somebody is not following it? So here we will now dwell into the legal uh, backing of why this IMS has came into picture. Section 16 subsection 2 clause AA of CGST Act, which was inserted by Finance Act 2022, gives the backbone or have the basis of having compulsion compliance with the IMS. Unless section 16(2) talks about the certain conditions based on which you will be able to take the ITC. Otherwise, you will not be able to take the ITC if you are not complying with those conditions. Some of the conditions in section 16 are that you should be in possession of the invoices. Another condition of section 16 is that you should have received those goods or the services. One more condition which is specified is that those particular ITC for which you are claiming the ITC should have been actually paid by the supplier. The tax on those particular items or those particular transactions should have been paid by the supplier. And the another condition which was inserted by Finance Act 2022, which is clause AA, it says that unless the particular invoices are appearing in your 2B, you will not be able to take the ITC. So it is very much important that you will be able to claim the ITC only and only when those particular invoices are appearing in your 2B. Unless those transactions are appearing in your 2B, you will not be able to, or you will not be able to legally claim that or legitimately say that these are the legitimate eligible ITC that you are claiming. So Again, this is again backed up by Rule 60 of the CGST rules, which governs the GSTR 2B. Initially, GSTR 2A was introduced, and later, based on the freeze figures, which whatever the transactions that are being reported by the supplier up to the deadline that is given to them to upload or file their GSTR1, if those transactions are filed by the supplier within their timelines, within the time limit or the due date of GSTR1 or IFF, then those transactions will come into or become part of GSTR2B. So GSTR2B is a static statement. So GSTR 2B is governed by Rule 60. So based on Rule 60, only those transactions you will be able to claim which are available in your GSTR 2B. Section 16 to AA read with Rule 60. You based on both, if you satisfy this condition, then only you will be able to claim the ITC. So for introduction of the IMS, various advisories were being issued, and later on it was gradually amended, or the changes were being made to those compliances that they had initially introduced in October. From the period of October, the advisory came in September, but the actual implementation was done in October 2024. Then later in September 25, the changes were made to the credit notes, whether you can keep it pending or you cannot keep it pending. Earlier, initially, only the B2B transactions were allowed to keep on pending. As we mentioned earlier or discussed earlier, that whatever the transactions are there in or appearing in IMS, you need to take the action on that. Either you need to accept it, or if it is not yours, then you can reject it, or the another thing is that you can keep it pending to for the future to take the action on those transactions. So GSTR for B2B transactions, it was allowed to keep it pending, but at the initial phase, credit notes were not allowed to keep it pending. See, understand the mindset of the government, that if you are claiming ITC afterwards, when you are eligible, at that point in time you are not claiming it, and you are claiming it afterwards, then there is no issue to the government, because it is your cash flow that is impacting right now, and in future you will be taking advantage of that. But if you are postponing to take the credit note, it is impacting the cash flow of the government. So government has mandated originally, when the IMS was introduced from October 24, that you compulsorily take action, either accept it or reject it, the credit note part, so that the whatever ITC that you are availing at that particular point in time, or GSTR 3B filing, uh, you claim the minimum ITC. So credit note portion, you need to take the ITC which is legitimate and you are 100% sure of, or we can say that whatever reduction that has to be done, it should be done immediately. That is the intention of the government. While reversing, so in September 25, the new changes were made, and it was proposed that those credit note can also be postponed up to the period of 1 month, or subsequent one period it is allowed. For quarterly filer, it will be allowed for 3 months because their frequency is quarterly, and for monthly GSTR1 filers, it is monthly, or 1 month postponement is allowed for credit notes. Later on, in June 19, 2025, the new advisory that they have issued, that is realizing that there are many transactions, or since this particular compliance are new, many transactions are being inadvertently rejected by the recipient, though it is correct. So, and because of this, many credits, the recipient is not eligible, not able to get the legitimate ITC, which otherwise he would have been allowed. Because of the rejection, the ITC is getting not appearing or translating in GSTR 2B, and it is Because of that, GSTR 3B, they are not able to file it with correct ITC, and it is resulting into the additional cash outflow. So they are, if you go through section 16, all the conditions are getting satisfied, that the invoices are also appearing in 2B, or GSTR 1 filed by the supplier. So it is appearing in 2A. It is appearing in my IMS dashboard. The seller has already paid the taxes. The tax payment is already been made. Invoices in my possession. Goods I have already received. So I am satisfying all these conditions. But in spite of that, just because of this rejection of that particular B2B invoice or the debit note, I am not able to take the ITC. So in June 2019, or in 19 June 2025, our government come up with the advisory to resolve this particular issue, that how they can claim the ITC even if it has been rejected. For that, we will discuss in detail in future slides, further slides, that how we can claim the ITC. Then in October 8, 2025, the another clarification was introduced regarding the auto population of the ITC. Now, let us come to the question that we are discussing, whether the IMS compliances are mandatory or it is optional. The GSTN advisory, which was introduced, that, and it is categorically mentioned that IMS is not mandatory. It is not mandatory to take action, that you either accept the invoice, reject the invoice, or keep it pending. But they uh, come up with a guidelines, or they have made it indirectly mandatory, that if you are not taking any action, then it is deemed accepted, and based on that your GSTR 2B will be freezed, and it will be become part of your GSTR 2B. So however you may say that it is mandatory or not mandatory, you are complying with the IMS software by not taking any action on that. So not taking any action is resulting into by default acceptance of those particular transactions which are appearing in the IMS dashboard up to 14th of the subsequent period. So you cannot claim the ITC beyond GSTR 2B period without DRC 1C liability risk. This is something that uh, that is resulting into the taking action on the IMS portal. So to avoid the risk of the future notices and your GSTR 1 getting blocked to be filed, it is important for you to take the comply, or you to comply with the IMS portal. Some of the invoices which are getting rejected, and it is resulting into permanent reversal of the ITC, and unless it has been re-reported by the supplier. So this is also again the issue, that if you inadvertently reject a particular ITC, it will result into difference between 2B and the ITs that you are claiming in GSTR 3B. So this will also lead to the notice that is in the form of DRC 1C. We are going to discuss DRC 1C in detail in future slides. Then we come to the credit note part. If the credit note have been uh, uh, not taken action within a particular time period that it has been mentioned, or you are not in conversation with your supplier, that why this particular credit note has been issued and why it is not reached to me, or what is the reason that this credit note has been issued, and if you are not able to take a timely action, then it is deemed acceptance, will result into excess cash outflow in GSTR 3B. So here we, by understanding this much, we come to a conclusion that GSTR or IMS is by default a mandatory compliance that is to be done. So can government have such compulsion on me to have the mandatory compliance of IMS when it is not directly part of the compliance mechanism that has been prescribed either through rules or the act? Can the government do so? That has been challenged in the High Court. The IMS implementation or procedural compliance of the IMS is not directly been challenged, but it is indirectly been challenged that unless the supplier is making the payment of the invoices that has been uploaded by him, I'll not be eligible to take the credit. Unless, though I have made the payment to the supplier and he is not uploading those invoices on GSTR1, whether it is valid or not. So these questions are being posed before the High Court because till now the tribunal was not functioning, and from this month only it is getting formalized and having the one more remedial option that we have. So various high courts like Telangana and Bombay High Court rule 86A for blocking the ITC also questioned, and it requires that the whether the proper personal hearing was given or not, whether is it a natural justice that without even after complying all this thing, I am not eligible to claim the ITC. Is it in the course of natural justice? IMS rejection is alongside and whether it is a mandatory thing that I should be following or not, that is being indirectly challenged. And it is also challenged that whether the ITC, even if it is rejected, is it something not my vested right that I should be eligible to claim even if it is not uh, appearing in my 2B? So that has been challenged in various high courts. Now IMS in IMS you need only required to take only three action: either accept it or reject it or keep it pending. So pending is not the option. You'll either have to take the either you'll have to accept it in future or you will have to reject it in future. So I say that you have only two options, either to accept it or reject it. So what effect it will have? If you accept the particular invoice on the IMS portal, then it will move to GSTR 2B and it will become formally part of your eligible ITC before checking into the another other conditions that the law may require. So it is very well, we can say that it is something that you are eligible to claim the ITC, and it will then translate into GSTR 3B, that table 4A5, it will auto populate in table 4A5 as an eligible ITC. So for which transactions you need to take action as accept? As we mentioned that you can take this action as accept only in the cases where the ITC is eligible to you, or we can say that those particular invoices actually and genuinely belongs to you. So then only you should take the action as accept, or you should accept those invoices. When you should reject those particular invoices if it is appearing in your IMS portal. So you will reject the invoices if it is been wrongly issued to you, the party is not known to you, and some invoices are appearing in your 2B, but that is not the genuine transaction that you have agreed upon. So you can reject those transaction. It can be invoice, it can be debit note, it can be credit note. So you can reject those particular transaction which is appearing in your 2B. So what will be the effect if those particular transactions are rejected on the IMS dashboard? So this transaction will get eliminated from IMS dashboard, but it will move to GSTR 2B as rejected transactions. So these rejected transactions will not move to GSTR 3B. As these are not moving to GSTR 3B, it will not become part of your eligible ITC. Now the uh, third pillar comes, that is the pending invoices. If on a particular date when you are filing your GSTR 3B, you are not sure about whether those particular transactions are genuine or not genuine, when or you are not very sure about the transaction, that this invoice may be belonging to me or may not be belonging to me, then you can keep those transactions as pending for the action in the next month or the future upcoming months. You can keep those transactions as pending as long as you want, up to a certain statutory deadline that has been prescribed in GST law. So this is something which was the IMS. So now I have here the illustration of how it will look or how this particular transaction will flow in your IMS dashboard. Of course, there will be GST number, invoice number, date of the transaction, type of the transaction, whether it is invoice, debit note, credit note. Based on that, you will be able to either accept those transactions, keep it pending, or reject those transactions. Once the transactions are accepted, then it will form part of your GSTR 3B as mentioned here in table 4A5, that it will become part of the transactions as all other ITC which is directly flowing from your IMS accepted report. There are few other transactions which may not be part of IMS. Say for example, if you are having a multi-locational uh, you are a multi-locational entity and having a registration in multiple states, then you might also have the ISD compliance. So ISD compliance is not as of now currently not part of IMS compliance. ISD is input service distribution. So those transactions will not form part of the IMS compliance. So against those invoices, you are not need to take any action of acceptance, rejection, or keep it pending. It will be directly flowing in your GSTR 3B. You can punch those figures. It is available in portal that those particular ITC is appearing. Based on this particular uh, ISD transactions, either you will be able to claim the credit or you can have a shorter figure also for reporting those ISD transactions. In 4A1, we have to report bill of entries, that is IGST transactions, IGST import transactions that you are claiming based on the bill of entry which you have filed. Bill of entry can be filed for import from outside India or it can be import from SEZ also. So yes, IMS dashboard also gives currently the transactions which are based on the import of goods, and also GSTR 2B which has been auto-populated. In that also bill of entry transactions are appearing, import of goods transactions are appearing, that this much ITC is you are eligible. And when we actually practically check the invoice management system portal, there in case of import of goods, there are only two actions that you can take. Either you can accept it or you can keep it pending. You do not have any option of rejecting because these bill of entries have been filed only by you. So there is no sense in having the one more option of rejecting it. Then there are again one more item which is not part of IMS as of now, which is RCM transactions. It is possible that you are receiving some services on which RCM is applicable and your supplier is reporting those transactions as RCM transaction and you are liable to make the payment for those transactions on RCM basis. So those transactions are also not part of the IMS portal. So what type of transactions are forming part of the IMS portal? Only those transactions which are filed by the supplier and are of B2B nature, which are not of RCM and it is not an ISD transaction. Those transactions will be forming part of your GSTR 2B and IMS dashboard on against which you will be claiming the or taking the action. Then there is one more table in GSTR 3B, that is 4B1 and 4B2. So one more important aspect which leads to or which simplifies this IMS compliances is that if you do not take or comply with the IMS portal, then it by default presume that whatever is appearing in your IMS dashboard that belongs to you and it is to be accepted. So once you accept it or it is forming part of 2B and then you are claiming it in GSTR 3B as eligible ITC, then whatever you are claiming it, out of that you bifurcate after that what is eligible, what is not eligible. If something is not eligible at that point in time, whether it is to be reversal or not reversal. If it is to be reversed, then why it is to be reversed? It is a permanent blockage by way of a 17.5, section 17.5 block credit it is, or it is a temporary reversal. If it is a temporary reversal, then it will be 4B2. Otherwise, it will be 4B1, which is a permanent reversal. Like, say for example, uh, you are in having some personal expenses or expenses are related to employees, some expenses which are in the nature of motor vehicle. You are not in motor vehicle business and you are receiving the ITC on motor vehicle, then those transactions will be then those transactions are of the nature which are having a permanent blockage. So those transactions you need to report in 4B1. Then comes table 4D. This 4D is this 4D are having again two part. One is the ITC which is not you are eligible. Again, these transactions will not be appearing or flowing to your GSTR 2B. It will be it will directly become part of your GSTR 3B as those transactions which are not eligible because of the place of supply or the time limit beyond which they have uploaded, the supplier is filed. Because of that, you are not eligible to claim. Then it will become part of your GSTR 3B at table 4D2, which is you are not eligible because of the place of supply issue or the time limit within which you should claim the ITC. Another table which is 4D1, wherein you report the transactions which you are claiming as 4A5, which you would have earlier reversed. If you are claiming anything which is appearing anything more than what is appearing in 2B, then either it should be reclaim of the ITC which you have earlier reversed, then such reclaim should be reported in 4D1. So this is something that I have explained to comply with the circular 170 as well as the IMS reporting, how it is getting impacted and how it should be reported in GSTR 3B. So now, as we discussed that whatever has been uploaded by the supplier in GSTR 1, it will become part of your IMS dashboard. In IMS dashboard, you will be taking the action either as accept or reject, or you will keep it pending. If you are not taking any action, then it is deemed acceptance. Basis on your action or deemed acceptance, it will become your GSTR 2B, which is generated on 14th of the next month for the previous month. So once this is being generated as 2B, it will directly flow into your GSTR 3B as 4A5, which we have seen in earlier slide over here, that it will be directly appearing here as by default credit that you are eligible. Then whatever actions that you are taking and keep it as pending, it will move for the action in next period. It will not become part of your 2B, and the same way it will not become part of your current period's 3B. It will be carried forwarded. There is one more important point that by introduction of GSTR 1A, wherein you are able to make changes in your outward supply that you have reported in GSTR 1. So once you are uploading your GSTR1. If there is any correction that need to be made, you make those correction in GSTR1A by filing GSTR1A. Again, 1A is optional, not mandatory. If there are no changes, 1A need not to be filed. Once it is been filed, your output liability is getting freezed. Once the output liability is getting freezed, it is getting hard locked in your GSTR 3B as liability to be paid as a on outward supply, which is table 3 of GSTR 3B. So you are not able to edit anything in GSTR 3B as a outward liability once you have filed your GSTR 1 and the necessary correction that you have made in GSTR by filing GSTR 1. Now we have the various type of documents or the action taken by the supplier on those particular documents. Can those particular documents be kept pending, or if it kept pending, what is the maximum time limit within which we are compulsorily required to take action against that? And what if you are not taking any action on those particular transaction? What will be fate of those transactions at a particular point in time? So let us go one by one. First is B2B transactions. So can the B2B transaction be kept pending? Yes, B2B transactions can be kept pending. It is not compulsorily required to take action on real-time basis on within the same period. You can carry forward it as we have discussed previously, and you can keep those transactions as pending up till the section 16.4 time limit. So now what is section 16.4 time limit? Section 16.4 is about the time limit beyond which you are not eligible to claim the credit. So say for example, we are in 2026-27. Any transactions that are pertaining to this period 26-27 can be claimed only up to 30th November of 2027. So 16.4 time limit for the transactions which are incurred or occurred during 26-27 can be claimed only up to 30th November of 2027. So that is the 16.4 timeline. So this particular timeline only applicable for the invoices and the debit notes. It is not applicable for other sort of transactions. So you can keep those particular transaction of B2B up to 16.4 time limit, that is 30th November of the next financial year. If you are not taking any action by those deadlines, that is the 16.4 timeline, 16.4 time limit, the 30th November, then it will be getting lapsed. It will not be carried forwarded further in your IMS dashboard. So on 1st of December 2027, you will not be eligible or you will not be able to see the transaction which earlier you were able to see and having a date of 2025-26. Now the another document which is debit note. Again, debit note will what will be the impact of debit note in your GSTR 3B or ITC? It will increase your ITC. So here also the same logic applies, that it can be kept pending up to the 16.4 timeline, and if it is not, if you are not taking any action, then it is deemed accepted. Now let us come to the credit notes. Credit note reported for the first time by the supplier. Earlier, see, as we discussed, this particular IMS was introduced in October 2024. For one year, up to September 2025, credit note, there was no option to keep it pending. You were compulsorily required to take action, either accept it or reject it. Based on that, it will flow to your GSTR 2B and GSTR 3B. But from October 2025, you are eligible to keep those credit notes as pending, but with a condition that you can keep it pending only for one period. That is, for GSTR 1 or monthly filer, it will be for 1 month, and for quarterly filer, it will be for 3 months. That is one period that they have mentioned that you can keep it pending. If you are not taking any action by those particular period, that deadline of extended 1 month or 1 quarter, whatever may be applicable, it will deemed as acceptance. So if those transactions or those credit note does not belong to you, you should consciously take call on those credit note and either accept it or reject in that particular month itself. Now next come is credit note upward amendment. So by what you will do by amending the credit note and increasing the amount of credit note, you are again reducing or further reducing that the ITC that you are otherwise eligible for. So in this case also, the same time limit applies from October 25 onwards. You are eligible to keep it pending for one period. Otherwise, it will be deemed accepted. Now, let us come to another point wherein the credit notes are amended downwards. So, as we mentioned that invoices, debit note, credit note, if uploaded originally, you can take three type of action: accept, reject, or keep it pending. If something is kept pending, of course, you are not taking an action right now. So there is no impact of those particular transactions getting amended. It will get auto replaced whenever the whatever transactions that you are keeping the transaction in a pending basket, that will, wherever the supplier change those transaction, it will automatically replace those transaction and the new transaction will appear over there. So say for example, in the month of July, I am reporting the particular invoice for the first time with a by giving a credit of rupees 100, and in the next month, and if as a recipient of the supply, I do not take any action or I take action and keep it pending, then those transactions, if again amended by the supplier and the ITC is reduced to 50 rupees, then whatever I have kept in pending, the original invoice which were earlier appearing as 100 rupees ITC, now it will be appearing as 50 rupees ITC. So this is how it will be. So it will auto replace the invoices if no action is been, or if it is appearing in your pending basket. So now if the credit note which is earlier I have rejected and now it is been amended as downward amendment. So downward amendment will what will it result into? Original was, say for example, 100 rupees credit note was uploaded by the supplier and it was rejected by B. Now he is uploading it by making it 50 rupees credit note. So it is resulting into lesser reduction in my ITC. So it is increasing my ITC to some extent. So in those cases, can I keep those transactions as pending? No, I'll not be able to keep those transactions pending. I need to take action in that particular month itself. And again, the rest of the things remain same. For invoices and debit note which are downward amendment and original invoices, if it was accepted, that means you have earlier accepted that you are eligible for the credit of 100 rupees, and because of this amendment in invoices or debit note as a downward amendment, your ITC is getting reduced to that extent. So in those cases also, when your ITC is getting reduced, you are compulsorily required to take action on those particular transaction. Otherwise, it will result into deemed acceptance. And the another aspect or the another item which was introduced from October 25. Originally, bill of entries ITC was not flowing into IMS dashboard. But from October 25 onwards, bill of entries are also appearing in your IMS dashboard, and you can keep those transactions pending for one tax period. Otherwise, it will get auto accepted. So this is something that we have talked about based on the FAQs and the guidelines that is been given by the on the GSTN portal. But while implementing it practically, what we have observed is that from October 25 onwards, we are able to keep the all type of transactions as pending. So 1 month timeline that is been given by them, actually it is not 1 month timeline. You can keep it pending for more than 1 month timeline. So this is again some difference between what they are saying and what actually it is how the system is getting controlled. There is no we can say the control what they have prescribed and what they are actually implementing. Now, section 16 subsection 4 cutoff period. We discussed what is section 16 subsection 4. This is the deadline by which you are, if anything is eligible to you, then you should claim those transactions in your GSTR 3B by accepting in IMS dashboard and claiming it in GSTR 2B or 3B. It will flow to your 2B and you can then later claim in GSTR 3B. If you are not taking any action by the cutoff period, that is the 30th November of the next period, it will result into deemed acceptance and it will move to your GSTR 2B and ITC will automatically flow. This is the default and we can say uh, mm, safe thing to do, that if something is not, some of the ITs that you are not or action you are not taking, then it will, you will be able to claim the ITC. And if some uh, ITC on which you are not taking any action on the 30th by 30th November, then you are not eligible to view or able to view those particular transactions in on first of the next year, 1st December of the next year. Then it will automatically get lost and those you will not be able to take the ITC. So it is better that you take the action, either accept it or reject it by 30th November of the next period. So sometimes it is difficult for many companies to adhere to these deadlines, but I feel personally that substantially the larger time period is given for complying with these particular transactions. ITC for a given financial year must be claimed by 30th November of the following financial year, and the example that we have already discussed. So it is by default, if somebody is compliant enough and filing their GST returns timely, then October return of the next financial year is the last return by which you will be eligible to take the ITC. October return or October GSTR 3B is filed by the due date, then 20th November is the due date, and by 20th November you would have claimed all the ITC which is pertaining to previous financial year. So this is, we can say that it is not the IMS cutoff, but it is the section 16.4 cutoff, which is time barring you to claim the ITC. Otherwise, IMS does not know what is eligible, what is ineligible. It is something that you need to take care of those transactions which are pertaining to previous period within a particular timeline. Otherwise it is not eligible. As we discussed, IMS is not legally mandatory, we can say, but it is by default a mandatory compliance that you are doing. As an internal auditor, what are the red flags? That some of the transactions that are continuously flowing or it is appearing as they have either not taken any action or it is pending for a long period of time. So you can have your assessment based on the profile of the company, whether a particular transaction that is on which it has been kept on pending for two months or 6 months, then you should escalate those transactions, have a separate report of that, and escalate those transactions to the management that these are the transactions on which further or the careful examination is required, or either it is genuine or not genuine, or why the company is not able to take call timely on those particular transactions that you can mention in your report. So as we discussed that section 16 is the backbone of claiming any ITC, and section 16 also tells you that something which is appearing in GSTR 2B can only be claimed in GSTR 3B. Otherwise, you should not claim it in your GSTR 3B. That is section 16 2AA. If it is not claimed within a particular time period, then it has its own ramification. But what if something is not appearing in GSTR 2B? Can I claim more than that? If you are claiming beyond GSTR 2B, then what are the issues? The first and foremost is that while filing GSTR 3B, your GSTR 3B will result into 3B will result into or table 4A5 will become red, that you are claiming more than what is otherwise eligible or a system generated GSTR 3B is showing. Now, there can be multiple reasons that you are claiming beyond GSTR 2B. It can be the opening balance, that is the prior period ITC, which you have reversed it temporarily because the goods were not received or the payment was not made to the supplier within timeline, and because of that you have not claimed the ITC, or you have claimed but you have reversed those particular ITC and now you are again claiming it back. Then appropriate reporting should be done at 4A5, 4D1, that these are the reclaimed ITC. There can be there can also be reason that something that you are not claiming on B2B basis, but it is claimed based on a particular document, which is bill of entry. Bill of entry can be of a normal import consignment outside India to India, or it can be from SEZ to DTA, SEZ to normal person which is not located in SEZ. So there also you are required to file bill of entry. So based on bill of entry, you will be claiming the ITC. So that can also be result into the claim which is more than 2B. There is also what we discussed, that ISD credit will also flow directly. So it will not also become part of GSTR 2B, but it will be directly appearing in your GSTR 3B and you will be claiming that ITC. So as we discussed that there is a possibility that you will be claiming the ITC more than GSTR 2B, and there can be multiple reasons for that. In DRC, if you are claiming more than that, then there is a possibility that the notice in form of DRC 1C will be issued to you. Now, when this when this DRC 1C will be issued to you, it will be issued to you if what you are claiming is more than 1 lakh, or whatever is you are eligible by default and you are claiming more than 20% on that. Say for example, you are eligible for 100 rupees, but you are claiming 130, then it is more than 20% of the otherwise system generated eligibility. Then it will result into DRC 1C notice. So whenever you receive these notices, you need to give response in DRC 1 part B, 1C part B, and you give the genuine reason, whatever may be the reason. It can be bill of entry, it can be reclaim, it can be the ITC which you had earlier not claimed but you are claiming now. So based on that you can claim it. There is also possibility that genuinely you have claimed excess, you are not knowing ek zero zyada punch ho gaya. Then what you will do, you can file, you can make the payment, make payment through DRC 03, and you can comply with DRC 1C notice. What if this notice has been received, that is DRC 1C notice has been received and you are not responding to it? So this not taking any action on DRC 1C notice that you have received because of the excess claim will result into blockage, or you will not be able to file your GSTR 1 or IFF of the subsequent period. So what will happen, that you will not be able to pass on the credit by filing GSTR 1 to your customers. So that is why it is important that whatever notices you are receiving in the form of DRC 1C, because of whatever may be the genuine reason, you mention it in the reply and file it within 7 days. If you are not filing DRC 1C reply, then you will not be able to file subsequent GSTR 1 or IFF. Now let's come to section C, that is IMS compliances. What are the common errors and what are the remedies that are available if there are some errors in reporting or errors in compliance with respect to IMS. The first common error is that by default, without checking the transaction, you reject the invoices just because it is appearing in your IMS dashboard. Say for example, something is there. So you are while complying with IMS portal, what you are doing is that you are comparing IMS data with your purchase data. You are accepting whatever is appearing and you are rejecting what is not there in 2B or what not there in your purchase register. So this implies that whatever invoices that you have received, you are recording it, and the balance you have not received, that is why you are rejecting it. So what will happen that some of the invoices or some of the supplier might give you the physical invoice later, or there is some genuine delay, or there is a month end because of which the invoices are not getting posted to you, or you are not able to receive those invoices within time. Then those transactions on which you are receiving those invoices that you are receiving in second month or the next month, again, if you try to claim the ITC, you will not be able to claim the ITC because you have already rejected those invoices. So this action of rejection or rejecting a particular transaction will result ultimately in your permanent loss of the ITC, which otherwise you would be able to claim. Another point, that if something of this sort has happened, that you have rejected a particular invoice inadvertently or genuinely, just because it is not appearing and later on it is you are able to receive those invoices and record in your books of account, and now you want to claim the ITC. So in this case, what you can do is that contact your supplier, ask them to report the same invoice again with the same transaction, same GST number. Of course, the GST number will be same, the date, the invoice number, taxable values, and the tax amount. If everything is aligned the way they have reported previously, if the same way they are reporting it again, you will again be able to see those transactions in your IMS. Once it is appearing in your IMS, you will be able to claim that particular ITC in the subsequent period. Here, what will happen is that you are at the mercy of the supplier if he is able to report those transactions again. If that supplier is not reporting those transactions which you have rejected earlier again, then it is a permanent loss. And you cannot blame also in this case to the supplier that you are not re-reporting it. It is your mistake that you are rejecting it without checking it. Or you had the option to keep it pending, but you are not keeping it pending. So this is one type of error, or we can say that the hiccups that you will face while complying with the IMS. Another practice that the client may have is that they are claiming only and only based on the purchase register. They are not checking what is appearing in your IMS. They are not checking what is appearing in your 2B. So in this case, what will happen is that for some of the month, you will be claiming the ITC which is less than what is appearing in your 2B. But for some of the month, you are claiming ITC more than what is appearing in your 2B. So there is no issue to the government when you are claiming less ITC when you are eligible for more. But when you are claiming more than what is by default available to you for that particular period, then it will result into notice in the form of DRC 1C. So here comes the issue. Here you will, though you are complying with the transaction, you are not claiming ITC more than what you are otherwise eligible to you, but you will have to give response in DRC 1C Part B as this particular transaction is either appearing in your 2B or not appearing in your 2B. Again, if it is not appearing in your 2B in current month or previous month, then you should by default pay it and close that particular issue. But if you are not doing so, then your GSTR one of the subsequent period, you will not be eligible to file. Now comes error number 3, that is no action is taken on the credit note within one period window, which is again the what they have prescribed in October 25 onwards, that 1 month additional period or one additional quarter, you can keep those credit notes as pending. But if you are not taking action on those particular credit note and by default you are accepting it, or by default it is resulting into acceptance, then whatever is eligible to you, you are reducing it by way of default acceptance of this credit note, and it will result into the cash flow, more higher cash flow outward. Now, error 4 is treating or assuming that I am not taking any action. That means I am not accepting those particular transactions. So this is something, the wrong thinking, that we can say that no action does not mean that invoices are not there in books and that is why are not taking any action. It will by default getting accepted. So it is important for you to take the action, rather keeping something as no action taken. If something is genuinely appearing in your 2B and the invoices are with you, then you should either accept it, or if that is not belonging to you, either you keep it pending for the future action, or that particular party is not at all relevant to you, and by error it has been appearing in your GSTR 2B, then simply reject it. But you should take some action. Now, error number 5, that ignoring 1A amendment and arriving late from the supplier. So, if something is been kept pending that we have discussed earlier, and later on it is getting amended, then it will replace the invoices replace the original invoice with the amended invoices. So it can be higher also, it can be lower also. So you should keep on checking your pendency. Is there any invoices which are kept as pending, are getting changed, getting amended? So as an internal auditor, you should also track the rejection, also track the pendency and the frequency, that you are within what frequency you are taking the action on the pendency. Error number 6 is not maintaining offline record or API logs for the higher volume transactions. See, in this particular year itself, from April 26, government has come up with the offline utility to comply with the IMS compliance. So for smaller dealer or smaller employer or smaller taxpayer, it is easy to take either accept, reject on directly on the portal. But for the taxpayers who are having voluminous data, either they can go for the software which is API driven software, which will give you which will link your GST portal on the software, and you will be able to take the action, accept, reject, keep pending with remarks, partial acceptance with remarks, whatever. Or you can have an offline utility which has been introduced in April 26 only. So that is JSON based, the way we are uploading GSTR 1, 3B, the same way offline utility is given for IMS compliances also. But practically offline utility should be avoided if the transactions are more than 50,000 as a practical advice. Now, how to deal with the incorrect rejection of the ITC in IMS. Now, as we discussed earlier, that there is a possibility that the transaction is rejected by you by mistake, inadvertently. So in those cases, what should be done? So if the transactions are rejected by you, then it is not that it will again appear in your GSTR IFF in the next period by default, but you will have to take some action on those rejected items if it is later on appearing in your purchase register. You will need to contact your supplier. If again 16.4 applicable applies here also, you contact your supplier, ask him to report those transactions again in the next GSTR1 or GSTR1A. Then it will appear in your subsequent GSTR2B. After accepting it, it will appear in your subsequent GSTR2B, and you will be able to claim that particular transaction as ITC in that particular GSTR3B. So in this case, what has happened is that your ITC is getting delayed by 1 month or 2 month or 3 month unless the supplier is re-reporting it, until the time the supplier is re-reporting it. So you are at the mercy of the supplier to take the positive action of reporting it again on the GST portal. For the supplier, practically this is not addition to their liability, because GST portal works on matching of the invoices. If a particular invoice was earlier reported with 100 rupees transaction and then it was rejected, and then now again it is reported as 100, then the portal will by default calculate liability for this additional invoice as 0. So here only after the reporting of the supplier you will be able to claim the ITC. If you are dealing with the multinational companies and they have a different department for the tax compliances, for purchases, for sales, and in that also there will be various department, then it will be nightmare for you to approach those tax officials of that particular department and to request them to re-report those particular transactions. So whenever you reject the transactions, please think twice before you reject it. And again, 16.4 time limit, as I have mentioned, that it applies here also. If something is been reported by the supplier beyond the timeline of 16.4, then you will not be able to take the ITC even if it is re-reported. Now, as we discussed that IMS compliance can be done either online, that you directly visit the GST portal, that is after logging into go to services, returns and IMS compliance. You can take either action either as accept, reject, keep pending, or in credit note also partial acceptance, full acceptance, with reason, with communication, that you can do online. So there is one option that you visit the GST portal, check what are the invoices. There is a filter option also available. You can check it through GST number, invoice number. Based on that also you can have a bulk acceptance, bulk rejection sort of thing. There is another option is that API based compliances. So API based compliances, in API based compliances, the software providers, or we can say the accounting software or the third party tax compliance software, those softwares will talk with the GST portal, bring all the IMS records to their system. You can take the action on those software and again upload those transactions on the GST portal. So this is a bridge, or we can say convenience, that has been provided, or it is you'll be able to get through SAP or Oracle or Tally. These are the some of the API based solutions for IMS compliances. So it will take action on your behalf. API is the technology, or we can say a bridge between the software and the GST portal to take action on your behalf. Another option is that offline utility, which we discussed that it has been introduced in this particular year itself from April 26. It is just 3 months that it has been launched, and it has its own limitation that it will be, of course, it is simpler than the online utility, but For voluminous data, offline utility should be avoided because it has its own limitation in terms of number of transactions that you can download, take action, and then upload it. So it is, as an internal auditor, based on the volume of the data or the complexity of the data, complexity of the nature or the nature or type of business, you can recommend what type of tool they should adopt for compliance with IMS. What are the corrective actions available to the taxpayer under IMS? That if you are complying with IMS, uh, how it will be easy for you to comply with the requirement of GSTR 3B or Circular 170 that we will discuss here. So before filing GSTR 3B, whatever IMS records that you have, you should take action, that is accept it, keep it pending, or change the rejection figure. You can modify rejection amount either partially or completely, and then file your GSTR 3B. Based on this IMS records of acceptance, the GSTR 2B will be generated on the 14th of the next month. And this is the static GSTR 2B, which will not get changed. After filing 3B, if you cannot take any or you cannot modify the action that you have taken previously for that particular invoice. That means that unless GSTI 3B has been filed, you can accept, reject, or modify the transaction as many times you want. So before filing, you can change it multiple times, and based on the final outcome of 2B, you can file your GSTR 3B. And we discussed that if something has been rejected wrongly, then you should contact your supplier to re-report it. Regarding the IT's reversal flexibility, that you can have the credit note you can keep the credit note pending for next one period as per the advisory of the GSTN portal, but practically you can keep it pending as long as you want up to 16 for cutoff deadline. Then there is also feature of remarks. When you are rejecting a particular ITC, you can have a remark on the GSTN portal that you are accepting this much and rejecting this much. And you can have a remark that this rejection is on account of this. Say, for example, the goods were received short, or there was some delivery issue, or there can be multiple other reasons. And you can mention those reasons in the, you can have a systematic log of those reasons rather than reaching it through mail or through WhatsApp. Then there is one more introduction that we discussed from October 25. Bill of entries are also appearing in your IMS portal. And on that also, you can take the action of acceptance or you can postpone it. You cannot reject it. Now, section D, which is DRC 1C, which is the notices that you come across if you are not complying with DRC 1C. So what is DRC 1C and why it has been issued? DRC 1C is issued when your claim of ITC is in excess of rupees 1 lakh appearing in 2B. It is more than 1 lakh than what it is appearing in 2B, or it is 20% higher than what it is appearing in 2B. Then this DRC 1C, DRC 01C notice will be issued to you. It is governed by Rule 88D of the GST rule, and it is effective from December 2023. It was introduced, and it is compulsory to have the response against DRC 1C. So what is the frequency of issuance of GST DRC 1C? This notice has been issued to the monthly filer on monthly basis and to quarterly filer on quarterly basis. And based on this only, you will be able to take the action that if it is issued monthly, then you take the action and file your response in 1C Part B and file your next GSTR1. If it is not filed within timeline, then your GSTR1 will be blocked. And whether you have received this notice, you will come to know by email and SMS both. And you can go to services, then returns, and then return compliances to comply with the uh, 1C notice. We'll see in future slides what are the reasons that can be given to comply with the 1C notices, or what other corrective actions that can be taken against the 1C notices. What happens if it is not replied within 7 days? We discussed that you will not be able to file your GSTR1. Uh, if you are further, if you are complying, we have practically noticed that even if you are complying with your or DRC 1C notices, you are receiving the notices further in terms of section 73 and 74 for this higher claim of ITC, which you have already explained by way of a response to DRC 01C notices. So when you receive these notices under 73.4, and many times uh, you may get also inquiry as per section 151, wherein you are asked to produce all the records based on which you have claimed the ITC, even if you have reported or responded to the notices in Part B. Of course, any notice will come with a surprise or the bonus of interest and penalty. And based on your capability to prove it or the facts of the case, interest and penalty can be avoided. So how to respond DRC 1C notices in Part B? So there can be two ways. If it is genuine difference, then definitely you should pay the difference amount by filing DRC 03 and select the reason of DRC 03 as mismatch between GSTR 2B and 3B. Then another option is that you can have a reason of genuine ITC access claim because of bill of entry, or it can be the ITC which you have reclaimed and not earlier reported as reclaimed or reversed earlier. This can be possible. So this is the by and large the text of the Part B reply that is there. So you can make the payment of DRC 13 and mention the DRC number, that this is the amount that you are paying it for the mismatch reason between GSTR 1 and 3B. There can be also possibility that the difference is genuine, that it is on account of the import of goods which is not appearing in your 2B. ITC on import IGST that is not appearing in your GSTR 2B. It can also be possible that the ITC which you have earlier reversed on account of 180 days reversal, or it is on account of non-filing of the GSTR 3B of the supplier, and you are claiming those ITC again in table 4A5 of GSTR 3B, and because of that you are claiming it higher than what it is appearing in your GSTR 2B. So those transactions or those details that you can upload it. You can also have those reconciliation in PDF. You can certify it and file as a response. There is also option to attach file with in PDF format along with the GSTR 1C Part B reply. So that will save you in future to respond to the specifically the notices which are issued in section 74, where the penalty reaches to 100% of the excess claim that you are claiming. Now, apart from GSTR 1C, other notices that you receive is based on the machine learning that is been there at the GSTN portal level or the respective state department level, and the respective, I can say that at the center level, it can DJ ARM or other softwares through which they come up, they compare the peer groups. If you are in a particular sector, it will be compared with the other competitor and what are the ratios of the sales versus the ITC that you are consuming, and based on that the notices in various forms may be triggered. Either it can be DRC 01A, it can be section 151, it can be an inquiry notice also, it can be ASMT 10 notices under section 61 also. So these are the different type of notices to which against ASMT 10 you will respond in ASMT 11. What are the common AI red flags that generate the notices? Mismatch between the turnover as per GST returns and the turnover that you declare while finalizing your financial statement. There is also possibility that you are claiming maximum ITC and you are making zero cash payment while filing your GSTR 3B. That department may come up with a question that either you are not having uh, value added in your business and that is why you are discharging everything through ITC, or if you are an exporter then also this is also possibility that you are facing these notices. There is also one possibility that e-invoice generated but e-way bills are not generated. So department is matching that e-invoice is generated in that you are mentioning that it is an HSN code, but and the invoices are having value more than 50,000, 1 lakh rupees, but respective e-way bill corresponding to those invoices are not been generated so far. So it can be flagged as a, or it can be flagged as a non-genuine supplier or bogus supply, or it requires further introspection or audit of those particular transactions. So those notices may also come. Incorrect or generic HSN codes are flagged heavily from 2025 onwards. It is noticed that various transactions, if it is, say for example, you are receiving various materials and which is into the HSN codes or service under 9954, or it is into the cement category, it is into the steel category, and your business is something else, then department come up with the notices that you have claimed so much, so these things, and we believe that it is not in line with your business and it is ineligible ITC. So give your records or reverse it. So these notices are coming because of the AI scrutiny engine that they have at their end. There is also possibility that the transaction that is reported by the supplier as a RCM transactions and you are not paying those transaction on RCM basis. There can also be possibility that you are having uh, various import transactions, import service transactions, wherein you are issuing 15 CACB, now 146, and corresponding RCM you are not paying, because generally it is assumed that wherever you are remitting money and it is on account of the services that you are receiving, then it will be those services will be liable to RCM, considering it as an import of services. So these are some of the mechanism that they have at their end to trigger or give you the notices. Then there is Director General of Analytics and Risk Management. This is the unit which is the central GST has, and they give the information to the jurisdictional officers, considering particular supplier as a risky exporter or risky supplier, and they verify the transactions whether it is genuine, non-genuine. They come based on the transactions or the level that they can check who is the supplier of whom, and again who is supplying to him, and then again who is supplying to him. Is it that there is no movement of the goods and to the end supplier, and he is in between breaking the chain of the actual movement of the goods, and directly the end consumer is, or the end recipient is taking the ITC without having any e-invoice or receipt of the goods. So they have the mechanism to check up to 10 layers or the chain of invoices. They can go to check the buyer, who is the buyer of whom, and the related verification they trigger and give it to the jurisdictional officer or the investigation officer actually check those invoices and investigate into the matters of the genuineness of the transaction that has been incurred by those particular taxpayer, whether those transaction or the invoices are actually genuine transactions or not. So this is some role that they play based on the data that we are uploading by GSTR1, e-way bill, e-invoicing. Uh, they check all this data, they try to match it, and wherever they find it, so find some anomalies, they come up with the notices. From July 25 onwards, as we mentioned, that output liability of GSTR 3B is logged based on the GSTR 1. If something needs to be changed, then it should be changed by filing GSTR 1A, and you can amend your GSTR 3B. Again, in this from July 2025, it is expected that it is further going to be hard locked the ITC that you are claiming. This is something in July 25, it was the output liability that was being freezed in GSTR 3B, but now from July 26, it is there are news in the market that from July 25 onward, 26 onwards, your ITC is also going to be hard locked. You will not be able to edit the ITC. Of course, barring few exceptions, I don't think it is going to be so much hard and fast that you'll not be able to edit the ITC. But with a certain provision that uh, say for example, there is a requirement of reclaim of the ITC which you have earlier reversed. So to that extent, they will allow you to edit the transactions or the ITC that is in 4A5. But of course, officially nothing has come up so far about the July 26 amendment that they are coming up. Now comes section E, which is specifically to the internal audit point of view. So far, we have understood the mechanism, how GSTN portal works, what is its legal requirement, and how remedial action can be taken. Now, as an internal auditor point of view, how and what type of things you will keep in mind. The first part is the IMS checklist, wherein process and controls uh, that you will take care of while doing your GS or you doing your internal audits. First is that what is the SOP that is being adopted by the particular company for complying with the IMS requirement, and who is responsible to comply with the IMS system. So, is it a finance controller or indirect tax manager, CFO, or the accountant is only doing accepting, rejecting on its own and filing GST 3B? So, is there any maker checker available in the system while taking the action of IMS that you need to check whether there is any SOP, formal SOP is there, and whether it is getting complied uh, complied to those SOP or not. Any deviation, again, it is to be reported in your internal audit report. Then there is a IMS to purchase register mapping. Something is there in IMS dashboard, and something is there in your GSTR or in your books. Whether it is been reconciled timely basis before GSTR 3B is filed, what is the mechanism through which they are doing this? What type of reports they are getting from this reconciliation, what type of actions they are taking based on this reconciliation that they are doing, whether those actions that they are doing are in compliance with the IMS requirement, whether it is hampering in a negative way, or it is getting affected in a negative way to the company, that there is a possibility that the company will be in permanent loss of the ITC because of the non-compliance or incorrect compliance of the uh, reconciliation. So those details needs to be flagged out in your report while doing the IMS compliance. When IMS compliance has been done, purchase is reconciled with the IMS dashboard, what actions are being taken for the pending register that they have on the portal. There is a possibility that they will have a pending report on the GSTR portal, but whether they are also having on monthly basis pending report offline, if there is a pending report offline, then it should back with the invoice date with the transaction, and in which month this action is been converted from pending to accept or reject. What is the time gap between the first appearing those transaction in IMS and the actual action is been taken of acceptance or rejection? Is there any timeline internally defined by the uh, company that any pending action should be addressed within a particular timeline? Whether there are certain transactions which they are keeping as pending and are near to the cutoff date of 16/4. If so, why the actions are not being taken on those particular transactions? What is the possibility that those transactions you will be eligible to claim the ITC? Based on this, you can ascertain the risk and report into your in your internal audit reports. Then, wherever the transactions which are rejected, not appearing to be and reject not appearing in your books, and because of that it has been rejected, then reason for those rejection should be recorded, because re-reporting is again an Herculean task to approach or get catch hold of the supplier and then to request him to re-report those particular transaction, and then you claim it ITC. So rejection, what is the reason of those rejection, that should be documented, and what action, whether those rejection reasons are correct, whether they should have they otherwise they would have be able to keep those rejection transaction as pending and later on they are able to accept it. What are the timelines by which they follow that if something is not, some invoices are not coming within a particular timeline, then they are going to reject it. So what are the SOPs that they are following, whether there is any compliance or non-compliance with regard to that should be brought into the internal audit report. Again, these are the transaction level items. So based on the volume and the quantum, you can have the call of the high risk, medium risk, low risk in your internal audit report. Then how, whenever there is a DRC 1C notices, how the company is complying to that, whether they are replying to those notices within time, whether because of that their GSTR1 and IFF is getting blocked, and whether because of this action of non-replying to the notices are resulting into business disruption. So you need to think from the point of view that a small non-compliance can result into the serious business existence crisis, that the supplier or the customer may uh, break the contract with the company and find out some other competitor. What is the possibility that if you are not uploading your GSTR1 or invoices in timely manner, then the other guy, the customer, is not going to release the cash flow, and you are in serious cash flow issues. So you need to think through the business aspect also while complying this DRC 1C notices. Then now second comes the validation part, that what is the possibility or what are the mechanism that they have that your GSTR 2B and purchase are exactly matching, or purchases are having more transactions than what is appearing in 2B, because it is possible that some of the invoices are appearing in 2B, appearing in your purchase register, but it is not been uploaded by the supplier. So if something is not uploaded by the supplier, then what actions they are taking, whether and what time they are reaching out to the supplier to re-upload or upload for the first time those transactions. Then comes the transactions which are there in GSTR 2B but not in purchase register. So is it possible that the transactions are reported by the supplier twice? Is it that there are some activities which are flagging the fraudulent incident in the company, or there is a possibility that there is always an issue that the invoices coming in GST to be first, and after 2-3 months without any backing of the e-way bill, the invoices are being recorded in in the books of accounts. So these transactions you need to check while complying with the validating the to be versus purchase register. Based on the differences and the reason thereof, you can have your reasons. And once it is matched of IMS and the purchase register, it is sure shot that you can claim the ITC. But whether those claim, or just because the invoices are getting matched with 2B, can you claim the ITC? No. You should further need to check whether those ITCs are eligible ITC and it is not blocked by way of 17(5) or some other transaction, whether it is in the course or furtherance of business and other sort of thing. So if it is related to club, restaurant, personal consumption, motor vehicle, then those transactions are not eligible as ITC. So even if it is appearing in your 2B, it should be reversed in 4B1 as permanent reversal. That means it will be first be reflected or appear in GSTR 3B in 4A5. Then again you need to report to the extent of permanent reversal in 4B1. Then again one more point comes in that GSTR1 is getting uploaded by the supplier, but whether he is also filing his GSTR 3B consistently and within time. So if the vendor or the supplier is not filing GSTR 1 and 3B timely, then your ITC is at risk, because there is one condition that if the supplier is not making payment of the tax, then you need to reverse the ITC along with the interest. Then there is vendor checking is also important, that the GSTN of the vendor is cancelled or suspended. If that is so the case in GST, that they have uploaded GSTR1, or you are having or you are in possession of the invoice but his number has been cancelled, then there is a possibility that you again need to reverse the ITC on the GST portal. Then another aspect that you should keep in mind is that what is the ITC to output ratio, and what is the ITC to output ratio of the peer groups. Why there is a difference? There should be documented reason. As an internal auditor, you should check this also. There is again e-way bill and invoicing we have already discussed. So records should be those anomalies should be recorded with reason that why there is a difference. Then there is also possibility that GSTR 9 and 9C reconciliation needs to be done at the IMS level. So whether IMS compliances are done in a particular way that they are able to easily reconcile the ITC while filing their GSTR 9 and 9C with what is there in their books, because ultimately your IMS compliance will result into the compliance with circular 170 of timely reversal and reclaim and whatever there in your books. So it will be easy if you comply with IMS to draw the GSTR 9 and 9C readily. Now, what if the supplier does not file their GSTR 3B within next financial year or by 16/4 timeline? Then in that particular scenario, as we mentioned, that one of the condition of 16(2)(c) is that if a particular supplier is not filing their GSTR 3B within time, then he will need to reverse those particular ITC, the supplier or the recipient need to reverse the ITC which he has already claimed based on IMS. Of course, there is a timeline given by the department. If it is you are reversing within 16/4 timeline, then interest need not to be paid. But again, the supplier is the question. Credibility of the supplier is at question over here. So now I've finished whatever I wanted to say, but what are the key takeaways as internal auditors for you? Number one is that IMS is the new gatekeeper for the ITC. So every record accepted invoice is the evidence and every rejection needs to be documented. Number two, deemed acceptance is safe but passive. Build an active monthly IMS review into the compliance calendar. DRC 1C must be replied within 7 days. Failing to do so will result in blocking of your GSTR 1 for the next period. Section 16.2 AA read with Section 16.4 are the twin legal fans of the ITC, and GSTR 2B acceptance alone is not sufficient. Number 5 is supplier compliance health is now an internal auditor responsibility, that is to check GSTN status, their GSTR 3B filing records. Thank you. We can, if time permits, we can have the question.
Those the participants who have the questions can mention it in the question and answer section if there is any. So one of the participants have posted the question: if an invoice from a creditor is received late, but claimable ITC is already reflected in GSTR 2B, whether to reject it or show it as pending.
Invoice is received late, but it is appearing in your 2B. Then it
Yes.
should be kept as pending until you are actually receiving those invoices. So by default, your action should be keep it as pending and not to reject it. Unless you are approaching the 16/4 deadline, you should keep those invoices as pending. So what will happen when you keep it pending? You are not required to again revisit or reapproach your supplier to again re-upload it. If you reject it, then there is a mess that you are going to have in compliance point of view.
Okay. I think there is no much question left.
Okay.
So we will
Can we
end up the session. Yeah, just I am
Okay.
doing a formal vote of thanks.
Yeah.
So good evening, everyone. As we conclude this incredibly insightful virtual session, it is my absolute privilege to propose a formal vote of thanks to all the participants and the WARC and our speaker. So first and foremost, on behalf of all the participants and speaker, I would like to extend our heartfelt gratitude to our dynamic WARC chairman, CS Saurav Ajmera sir, and the entire team of WARC office bearers. Thank you for constantly organizing these highly relevant, timely, and crucial virtual learning programs for the CF fraternity. This is a huge help in learning recent amended the GST accession. A special and profound thank you goes to our today's speaker for the day, CA Ashwin ji. Thank you for your such enlightening session on indirect taxation (GST) for navigating the modern landscape of the invoice management system integration, AI-driven security, and 100% ITC validation. Sir, you broke down these complex tech-driven changes into practical, actionable insights, and your expertise has truly equipped us to handle the digital evolution of the GST audit with much more confidence. So thank you, sir, for once again for your time and all the efforts you have put in for conducting this session. And lastly, my sincere thanks to our virtual audience. Thank you for taking the time out for your busy schedule, for your participation, your continuous commitment towards learning is what makes this event is a great success. So thank you once again to everyone for participating and joining.
Thank you. Thank you so much. Thank you,
Mm.
everyone. Thank you,
Sir,
WRC.
so, sir, one question has
Yeah.
been came up.
Yes.
from Kalpesh Kochar.
Okay.
Uh, he has posted that if any sales invoice is wrongly rejected, then what is the remedy?
If a particular sales invoice has been rejected, that means it is your purchase. Purchase has been rejected, then you need to connect to your supplier again and you have to ask him to upload it again. And if as a supplier you are saying that if your sales invoice is getting rejected by the recipient, then you connect your customer again, because it will rejection will result into it will not reduce your liability in GSTR 3B. But once you again re-upload that particular transaction and ask the customer to accept it, of course, first you need to establish the connection. You need to connect your customer first, that this is the invoice that you have rejected. So I'm again re-uploading it. So please accept it. This is how it should be. It will not result into addition of the liability again in your GSTR 3B. It will get nullified.
Sir, one more question has came up.
Yeah.
Uh, so now the companies have to do two reconciliation: purchase register versus 2B and IMS versus purchase register. So how to keep track of the invoices which are booked in purchase register versus IMS versus 2B?
So 2B is the result of IMS that you are accepting. So you first need to keep track of what is there in your books and then what is there in your IMS. So reconcile your books with the IMS, and IMS whatever is been finalized, either you are keeping it as pending or you are keeping or you are rejecting or accepted. Something is accepted is resulting into permanent claim, that is in 2B. It is resulting in 2B. So there is no need to again verify what you have claimed, because it is something that you have already reconciled with one, I mean the purchase with the IMS. So what is accepted, that is only flowing to your 2B. So reconciliation only between purchase book and IMS. There is no purchase book and 2B. It is only the action that you are taking in the purchase in the IMS. So you need to tag only the month again against the purchase register that you are claiming this particular ITC in your IMS on in this particular month, because ultimately whatever is accepted, that is getting transformed as your 2B. So there is only one reconciliation, that is purchase with IMS. There is no purchase with 2B, because 2B is the resulting factor.
I think that's uh, from the chat. Okay, one member Shefali Mittal has posted one question, that I have a question related to RCM.
Okay.
If a transporter uploads invoice wrongly, which is not against my bill, how should I reject the same? The portal does not allow to move forward.
Yes. So there is, as I mentioned, that RCM transaction and ISG transaction are not part of IMS portal. So you have no remedy on IMS portal to connect to your vendor to accept or reject it. Okay, so there is no remedy on IMS portal, but again, you can connect it either offline or you can have there is a window on the GST portal to connect with your supplier. So you report those transactions on the portal and mention or write it to those particular transactions, the way we are doing for the suppliers or the creditors who are customers who are not paying us in time. We are writing it to them, right, on through GST portal, that please upload, otherwise this will be non-compliance and so forth. So that is how it is to be looked at. There is no option in IMS to take care of it.
Okay, sir, there is no more further question from all the members. I think that's it. Okay,
Okay.
that's it. Yeah, thank you, C.
Thank you so
Ashwin
much.
for
Thank
honor.
you, WRC. Thank you so much. Thank you, audience, for patiently hearing.
Okay.
Thank you.